An inside bar on a 1 minute chart is going to have the exact same characteristics as an inside bar on a daily chart. But how do you actually use that? Let me show you. So this is a candle, just a candle. It doesn't matter what time frame I tell you this is. This bar has a high and this bar has a low. This has an open and it has a close. We'll just say that this was the open, so this will be an up close candle. And this will be the close for that bar. Now, those things really don't matter when identifying inside bars. So let's take a look at the next bar that forms. We'll say this is the close. So the next bar opens here, and let's just, make us a little bar here. We'll say this is the bar, right? It closed just like this. It opened, traded straight down, and then this is what we got. So this bar has traded completely on the inside of this high and this low. Now, with this being said, there could be some other context in here that would tell us what we could be looking for next. There's an array of different things or examples of where this could be a reversal, or this could actually be a trend opportunity. But for this example, let's say that this bar broke out of a previous bar, something like this, right? We'll say that this was a candle. Oh boy, that's a rough one. They broke out of this bar and they closed. They closed outside of this bar's range. And maybe the market had even been going down for some time over here. So we get this bar formed here down at some lows, and then we get this bar as a breakout bar. And then the next bar ends up as an inside bar. Now on the next bar, what could we expect? We could expect either one, this bar opens, retests the low, and then goes up. The bar could open, retest both sides of this previous bar, or ultimately this bar could open, maybe retest the low. Maybe it doesn't retest the low, and then it just goes vertical, something like this, and breaks out of this bar's range and this bar's high, and either closes or maybe just goes back to retest this bar's high and then fails, or something along those lines. But the most important thing is that this bar was a breakout bar, then we get this sort of pause inside bar, and then a trend opportunity in the direction of the breakout on this bar over here. Now, this is a very important concept to understand once I start going into 3-day templates. Now, this could have been a 1-minute chart. This could be a 5-minute chart, 15. It doesn't matter. But I'm not trading this on a 5 or a 15-minute chart. I'm using 3-day templates, the daily chart, to help me identify these types of days so that I can get the best trade possible on this day right here that I've pointed to this very sophisticated drawing. Now, like I said, there's a huge array of different things that could be happening on this day over here. But what about a reversal opportunity? Or not even necessarily reversal. It could have been, a down moving market, and then this is just a 1 bar pulling back, or this is a pullback in general on a daily chart. So this would be like the pump up, and maybe this is a first red day, also an inside day. And then on this day over here, they're working at the high of the inside bar, or it's broken down. We're making lower lows, lower highs on the day itself. And then we can expect to get an expansion of this bar back down towards these lows. And that's what sort of setup I would be looking for. Again, the context is very important, and we're going to talk about that here in a second. Let's take a moment to acknowledge and talk about higher time frame traders. We're talking about hourly, 4-hour, daily chart traders, people who are mainly focused on previous day's highs and previous day's lows, and more specifically looking at the previous day's highs and the previous day's lows of these inside bars, because there are traders on higher time frames that are trading the breakouts of these inside bars. And when that happens, they're going to put their stop loss at the opposite end of the range. For example, this Monday over here was an inside day that didn't trigger previous day's low or previous day's high, turning this into a daily chart inside bar. And then they triggered the high first over here. So when this happens, they tap into previous day's high. Breakout traders are being triggered into the market. They're going to put their stop loss down at the other end of that range. So which means if I have a certain type of setup or a certain type of presentation of price on this day, I might be looking for a reversal, either coming off of the high or the low of the week, depending on the context. And then that trade could be going back for the other side of the range, because that's where the money is and that's where the stops are. Now, this being said, this doesn't always have to happen all in one day. So what I'm talking about is they broke out on this day, but maybe they don't make it back down to the other end of the range on that day. On the next day, they could roll over and go back for that level, because the money could still be sitting down there. You're going to see this very commonly, and you could even go and just look at any time frame chart. It does not matter. You could go to a 1 minute, 5, 15, and just take everything off the chart but the candles and just study price action that way. And just look at inside bars and see how they constantly create these inside bars, and it either breaks out, pulls back in trends, or maybe it hits both sides of the range, or breaks out one side, fails, go back to the other side, and then breaks out that way. You can just go back and study any chart and learn about the behavior of inside bars in those ranges. To caveat from the beginning of this video, talking about breakouts failing, and trading ranges. Whenever an inside bar forms, that is going to put the market into a trading range condition, because the bar that traded on the inside of that previous bar's high and low is consolidation. It is on the inside of a high and a low without breaking out. We are now on the inside of a previous high and previous low, making those highs and lows become more and more relevant. So the three things that markets do, we're starting to try and transition into how to actually use this functionally in our day-to-day trading. The market either breaks out, pulls back in trends, breaks out, fails, and reverses, or stays inside of a trading range. If it is a trend, high and low consolidation where the market breaks out of a high or a low, pulls back and begins to trend. Could be a breakout of a high or a low and then failing and reversing. We could go back to the 50% of that range or back to the other side of that range. Those are kind of the two most relevant areas when a breakout fails. And then also in a trading range condition, there was a high, there was a low. They've tried to go higher, they've tried to go lower, and we're just sitting on the inside of this high and low consolidation, and it's failing to go in any direction. So whenever I get an inside bar, I look at the context of what has happened first. Do I have a 3-day setup or a 3-day template that I'm willing to trade starting to present? Kind of going back to the beginning of this video where we have a breakout on one bar and then we get an inside bar, and then I'm looking on the next day for a pullback in a trend trade, or they could be working the high of that inside bar and then reversing. The context of those things happening is extremely important. And also, how do we get back to one of those levels? Let's say that we have an inside day. I have pictures for all this, so just bear with me. I'm working our way into a better understanding, hopefully. How do we get back to the previous day's high or the previous day's low? Do we get there in a stair-stepping motion, or are we coiled under or above a level to explode, going from the inside of a range to get back to the outside of that range? Timing. In my session, I trade the New York session, but you could trade Asia, you could trade London. The setups are going to remain the same. But me personally, I am awake for New York, and I trade New York pairs like indexes, gold, and oil. And those are the ones that move the most in New York, and I usually can find good templates in that session. But it really depends on you. So going from the inside, exploding towards the outside, or we're maybe stair-stepping up or down to that level for a reversal, or maybe we've broken out and we're layering on top and coiling on top, or broken down outside of a range to the downside, and we're coiling underneath for a range expansion of that range. If you've made it all the way this far in the video, you probably like it. So please do me a favor and hit that button down below. I greatly appreciate it, and it helps the channel and the video do much better. All right, so let's take a look at Tuesday. We had Monday's opening range, just a high and low. Don't even worry about Monday opening range or any of that stuff. Let's just worry about the fact that Monday was an inside day. That traded completely on the inside of the previous bar's high and the previous bar's low. And then on this day over here, I don't know what it's going to do. I don't know if it's going to go up, down, left, right. It doesn't matter. I'm going to look at the behavior on the day, build the best thesis that I possibly can, and try to ignore the rest. So part of the behavior, or part of my playbook, is whenever I have an inside bar, what do I want to see on this day to make me focus on this pair? One of those things is the stair-stepping motion down into a previous day's level, or up into a previous day's level. So in this case, we got the inside day. I think this was also a first green day, but we'll just ignore that for now. The fact that we have big down close bar, stair step 1, big down close bar, stair step 2, 1, 2, 3, down into level 3, third level, into that level 3, triggering previous day's low, and then immediately reversing and going back up. That is a massive signal to me to be watching this pair. All of those things in combination, let me repeat, stair step 1, stair step 2. That means absolutely nothing. In fact, that's very subjective. I don't know what it's going to do from here. I can just guess that maybe I'm going into the third level. And then I see this big 1, 2, 3 telescoping sort of pattern with the bars getting bigger and bigger. I could say, hey, thesis is being built. We've got volume trapped below push 2. There's push 2 here, and then 1, 2 below push 2 here, which lines up, funny enough, really well with push 2 over here. Maybe we're trapping volume down here. This bar closes, the new bar opens, and this is, so at the close of this bar right here, I would say, hey, this is looking pretty good. I need to get down to a lower time frame and figure out, do I have an entry either here or maybe in the first pullback over here to enter in on this trade to go back towards previous day's high. This is also a very good example of inside bar. Inside bar traders are triggered in at the low. The breakout fails. Now those breakout traders on a higher time frame are trapped. They put their stops at the other end of the range. Haha, we got you. And they go back and stop them out. The market is constantly going through periods of high volatility, going down into low volatility, and then back to high volatility again. Going from small ranges, periods of low volatility, and expanding into periods of large ranges, higher volatility. So whenever you get multiple or even just one narrow range day, you can expect that there is a possibility that the next day turns into a trend day or at least a large ranging day. Now, we're talking about inside bars and inside days. The whole point of me putting this up here is that there's going to be different types of inside bars. You could have a very wide range inside bar. So if, let's say that this, we had a really big bar here, and then the next bar is also really big, but it's completely on the inside of the high and the low of the previous bar. So that'd be like a very wide range inside bar compared to you get an inside bar that is very close to its open. So this is where it closed, this is where it opened, and we're very close. I know that this is not an inside bar, but I'm just using this as an example. Narrow range day, period of low volatility, we might be seeing a period of high volatility or larger expansion on the next day. Again, I'm just showing this as something to be looking out for, and also because much larger range inside bars, if you have a very wide range inside bar, there's a higher probability of that bar turning into a reversal trade. So this opened here and closed here. So this is actually still a very narrow range day. But let's say that this close was much further away and I got 3 pushes back down into that. There could be a high probability or a higher chance of that turning into some sort of reversal. But in reality, it doesn't really matter that much. It's just something to be looking out for. So in this case, this was also a narrow range day where this open was very close to its close, but you still had the opportunity for the stair step down into the level. That will happen. Sometimes you'll get a much wider range day where it actually stair steps down or up into a level. Of course, that is not in this case. However, this is still the same exact setup. This is a narrow range day, an inside bar or an inside day. And then that just leads me into, hey, maybe I could be watching this pair. I have a signal, but I don't know that it's necessarily going to lead to anything. But it puts it on my watch list. It puts it on the, maybe it'll form into something cool for the next day. So on Tuesday, we've triggered previous day's low. We've made a lower low over here, probably in Asia. And then that signals to me I have a high in place and I have a low in place. Again, I don't know what it's going to do from there, but that's a lower low. And then we get a higher high in the London session. Now, that is the first indication to me that this is building. This is turning into something. This has the potential to go from a period of low volatility to a period of high volatility because we've made this higher high. Maybe now I can look for a short squeeze pattern. And that brings me to my entry criteria. Short squeeze pattern, lower low, higher high. I wait for 3 pushes. 3 pushes is the next step in the criteria. Push 1, push 2, push 3. I'm at a level. 1, 2, 3. I'm at a level. Timing. 9:45. I like to trade after 9:30 in the New York session. So I get my engulfment over here in the New York session in a peak formation, down, up, down, and then engulfments and pin hammers to go higher. Perfect trade, perfect short squeeze. If you were to draw a little trend line on this, this would be like trap volume and a breakout down from the low of the day. And in this case, it's also the low of the week. Monday is the low, opening range low, and this is at the low of the week. So we're going from low of day, low of week, back to high of day, high of week. And also, inside bar traders have been triggered in at the low. They put their stops at the high. So that could act as a magnet for the market to return to. And just to reiterate that 3 push pattern one last time, narrow range, or maybe even a wide range inside bar. You got an inside bar, and this day over here, trading back up into the high, peak 1, peak 2, and peak 3, get your peak formation. Again, similar to some examples over here like we have seen. Notice we get the inside day and the 3 peaks down, and then the higher high, and then 3 pushes into the low. Same exact concept over here. 3 peaks back up to the high. It breaks down, lower low, 3 pushes back up into the level, and then the reversal back down. And I've even got it labeled off in the opposite direction as well. So if we were going down like this would be the same exact thing over here. Now, me personally trading New York, I look for the market opens. So I'm looking for these patterns, that pattern there, and this pattern over here to show up at a certain time of day market open, 9:30 a.m. Eastern time for me here in the New York. If you're trading Asia, if you're trading London, market opens are obviously going to be a different time. And we're going to go through one last little reversal sort of template. We got an inside day, so this would have been the inside bars low and the inside bars high. This is the US 30 on a 5-minute chart. High of day, we built this nice little rectangle, this nice little box of consolidation. And again, if you've never seen my 3 pushes video or you've never studied 3 pushes on your own, I really suggest doing so. 3 pushes is subjective, but it is a really interesting way of viewing price action, specifically around levels. So all of this means absolutely nothing, but we're at a level. And so I'm going to study the behavior of how we got to that level. And there was a box, we had a consolidation. And one of the things that I talk about is how does price come out of the box? And if it comes out in these 3 push patterns, that could signal a potential reversal. And that's also part of the inside bar criteria. So we get leg 1, push 2, leg 2, push 3, leg 3, peak formation. We've triggered the low. And we get the engulfment at a certain time of day, again, 9:45 a.m. Eastern time. Inside bar traders have been triggered in at the low. They put their stops at the high, and then they're getting stopped out back up here, going back for the money. There's going to be periods where a lot of times this one will show up, the trend trade. There's going to be times when the reversal shows up a little bit more frequently. I would say that the reversal shows up more frequently either at the end of a trend or maybe even in a trading range, so a larger trading range throughout the week or maybe throughout the month. You've just been in sort of an up and down repetitive trading range. I would say that that is when those inside bar reversals are going to show up a bit more in markets that are expanding aggressively to one side or the other, or coming off of or starting a new trend. That is when these breakout pullback style of inside bars are going to be more effective. Okay, so this is going to be a reminder. Again, the market only does 3 things: trend, reverse, or stay in a trading range. Stacey Burke taught me that. You can also look into Al Brooks. He has 3 different books on it about trading ranges, trends, and reversals. Very interesting stuff. Love studying price action, and those are some areas that you can, of course, go and find information about it. But also just coming down to the fact that this is an inside day, this is a breakout, and this is a pullback, all right? Don't make it too complicated for yourself. This is the high of the inside bar. This was a breakout prior to my session beginning. Hey, this is a breakout. They didn't just tap into it. They didn't just, we're going to dilly-dally. But then they slam back down into the level and it doesn't go anywhere. This is the most aggressive down close bar within multiple days, and then it just immediately stops and, starts whittling back and forth. This is a good place to maybe look for that breakout continuation to the upside. We're going to talk about range expansion real quick. So again, it's the same exact thing that I want to see for the reversal trade, except kind of think of it in an opposite way. Hey, that's a higher high. So if the pullback is going to come back down to this level here, breakout pullback, I want to see on a lower time frame some kind of stair step down here, a peak formation being made over here, because I want to trade on the right side of the V. I want to be trading over here. That's more high probability. I'm not going to get whipsawed as much. I want to get in as it is exploding to the upside, not necessarily in consolidation. So I'm waiting to try and get on the right side of this V. So breakout, pullback, continuation. Now, looking at range expansion, one of the things that you can do is you can measure from the high of the day down to the previous day's high and measure from there to there, and you can look at equal distant expansions of that range from high of day down to previous day's high, and that's usually pretty accurate. Sometimes you can measure the entire inside bars range, high and low, and that will sometimes be more accurate. It's really up to you, whichever one you find to be the most accurate. I find myself a lot of times being far more conservative, so I'll measure like from here to here, and I'll just take that as my expansion, which would have got me the first full leg, and I would have missed out on the second full leg. It really depends on your preference, but I usually tend to find myself being a bit more conservative in my profit taking. Now, I'm going to take you through a few examples. These are all going to be fairly recent. This was 1st November, and I'm starting here going backwards, but some of the other examples I've already used in the slideshow. So these are all very recent examples. This is an inside day, not necessarily narrow range. I think this is the first green day. Oh yeah, we've been going down, then we get a first green day, which is also an inside day. All right, so that being said, on this day over here, I've got options. All right, I can do nothing. I can look for a reversal, or I can look for a trend trade, and that is it. That's the only 3 things I've got to do. And on this day, I could say, okay, well, how is price behaving once we get to the low or once we get to the high? And what was the pattern for the day, right? So we got this consolidation at the high of the day, at the beginning of the day. I think this is probably in the Asia-London sort of session, that comes back down and starts doing that stair-stepping motion down into the low. All right, we get a low here, we get a second low here. This is all in hindsight because this is where the New York session begins, over here at 8 o'clock. This is 8 o'clock right here. We're still not at the level. There's leg 3 to get back down towards the level. Biggest bar on the entire chart, 930. Slams back down, 935, and then we get the engulfment at 940, going back towards the high of the day and back towards the high of the range. Now, would I have taken this trade? I am not very good at trading V-bottom reversals at all. Maybe I would have got in over here in this little part of consolidation. I'm just being completely honest with you all. First pullback in consolidation. This is one of the areas that I will look to get in, but I am not good at these V-bottom reversals, so I probably would not have personally taken this, but it's the idea of, behavior. This was push 1, this was 2, this was 3. 3 turned into a V-bottom reversal, peak formation low, and then possible opportunities to get in. This is a 5-minute chart, so, plenty of space. This is 76 plus pips back towards the high of the day. So plenty of room to get back up there. And then once you get up here, you get a 3 push pattern and an engulfment. Probably a good time to be getting out. And that's also the end of the New York session. All right, so let's go back and find some more examples. This is a really beautiful template. And just the only bad thing about it is the timing was a little bit off. So let's take a look at this and talk about it. We had a peak formation low on Wednesday. This is essentially the low of the week being formed on this Wednesday here. And then potentially failing on the next day. So maybe day 1, day 2 of the 3-day cycle. Won't even worry about that. Hey, this is an inside day. They didn't hit previous day's low. They didn't hit previous day's high. An inside day that's somewhat fairly narrow range. There's the close and there's the open for that day. So fairly close. So I'm only going to look for 3 things this day. I'm either going to look for breakout pullback trend, breakout reverse, maybe some kind of 3 peaks pattern up into the high at a certain time of day, or I'm going to do nothing. And in this case, the breakout and the pullback happened right over here. So we get a breakout, we get a pullback into the previous day's high, and then you see this little 1, 2, 3 pattern down over here. This is at 7 o'clock. So again, this is all in hindsight before New York even begins. There's 8 o'clock for the 12 candle window. Hey, so this is making higher highs and higher lows, even down on this 5-minute chart. Let's say that I want to take this as a reversal, and I'm seeing something like 3 peaks to the high. Well, all it's doing is making higher highs and higher lows. So I don't know if I really want to short this because, hey, this is making higher highs and higher lows. There hasn't been any sort of reversal yet. Maybe I don't necessarily feel comfortable going long off of this pattern, but I'm also maybe not going to short it either. So this would probably be a do nothing kind of day for me because it didn't meet the template or the perfect template that I would. All right, here's another one. Again, NASDAQ. This is the 18th of October. I've scrolled back a little bit to the next inside bar. We had this day over here, a fairly wide range day, inside day the next day. So this is what I was talking about. This is a really big bar on a daily chart, right? And although this close is, somewhat close to the open, it's not necessarily a narrow range day. So this day over here, we had a high and a low that's very far apart. And then this day turned into an inside bar. So this bar traded completely on the inside of the next one. The new day opens, does not trigger the previous day's high, comes down and goes vertical before the New York session begins. Now, I really want to pay attention to how, I'm telling you, once you start looking at these 3 push patterns, they're all over the place. Again, it's very subjective, but it can be a tool for you to use. Consolidation at the low. We get a breakout and then a pullback that lasts a couple of bars before it goes vertical again. All right, so we get 1, 2 little itty bitty bars here, a little bit of struggle, right? A little bit of sideways trading, and then 3. And notice that in the 3, these are the biggest bars in the entire trend. We get acceleration towards the end of the move, up, and then the engulfment of the peak formation high. After triggering previous day's high at the high, I think of not quite, yeah, at the high of the week on this Monday. So the new week has started. They triggered the previous day's high, and then you get your engulfment. Again, I am not very good at trading V bottoms and A tops, so I personally would not have traded this. But again, I just wanted to highlight the behavior of that 1, 2, 3 triggering levels after we get a signal day. All right, I transitioned over to gold. We got a breakout day over here. All right, exactly. Just go back to my drawing. All right, the super fancy, sophisticated drawing. We have this inside day here, and then we get a breakout day over here on this day. So inside bar and then a breakout. So let's just say, for consistency purposes, we'll say, hey, you know, this was an inside day. This is an inside bar. This is where the stops are going to be if they break out to the upside. So they break out, and it pulls back, and then they can't seem to get any lower, which also turned into a narrow range inside day. And then on the next day, turns into a breakout. So at this point over here, I've only got 3 options. 1, I do nothing. Number 2, it's a breakout pullback trend continuation. 3, it's 3 stair steps to a high or 3 stair steps to a low, and I look for a reversal trade. Okay, so this is not 3 stair steps to a high or 3 stair steps to a low. This is a breakout, and then they've pulled back to a level, so I can look for that setup to show up. Over here, 9 o'clock, new hour opens up. We've worked back down into the high, the previous day's high, excuse me. Once, twice, 3 times into the high, made a higher high and pulled back. And if you zoom in, it's a little bit, kind of a 1, 2, and 3 stair step back down. 1, 2, and then 3. Let me highlight that. Again, this is subjective. It is not meant to be, you know, set in stone rules or anything like that. The 3 pushes is just a way of gauging behavior. 1, 2, biggest bar in the pullback. 3, so maybe volume is trapped below push 2. We get the breakout over here. 9:30 is going to open up right here on a pin hammer. Big down close bar, pin hammer back up to the high, lower time frame going long. And again, to highlight, you know, what could you be doing as far as looking for range expansion? High of day down to previous day's high to find a level. So again, kind of similar to the other one, I would have got the first leg of the expansion and missed out on the second leg of the expansion, but it looks like it would have been the next day anyways. Another thing you can do is take it from previous day's high and put it all the way down to previous day's low of that inside bar and look for the larger expansion. And in this case, it did actually get up to 1 full expansion, again, catching that first leg, and didn't quite get up to that second full expansion. Pretty close. But yeah, that's the 2 different ways that I will look for expansions. And it could be on the other side as well. So let's say that, you know, we had broken out to the downside and pulled back, and then we get our trade to go lower. I would take from the low of the day up to previous day's low and measure from here to there, and then find my expansions from there. In this video, we have gone over what is an inside bar, the different types of templates, the 3 things that markets do, and how you can trade them effectively, or at least to a point to where you can go back and start studying them for yourself to help you build your study binder and your playbook. I hope you all have enjoyed this video. If you have, let me know down in the comments below, and please remember to hit the like button. I will see you all in the next one.